35 to 45% of startups fail because they are building things that people don't need.
I don't want a lawyer answer. Give me the real deal.
The mission we set is to generate $1 trillion in women-led wealth by 2050. Most people play zero-sum game. I play infinite games.
Welcome to the next episode of the Entrepreneurial Excellence Podcast. With me today, I have David Fogel. Some investors write checks. David Fogel builds ecosystems. He's been doing this for over 2 decades across 3 different continents. He's the founding partner of Alma Angels, a global community of investors backing ambitious women founders, building tech-enabled, IP-rich startups. Before Alma, David helped redefine what early-stage capital could really look like, especially in Europe. And after leading Wyra UK, Telefónica's corporate venture accelerator, he and 4 partners launched ADV, a $150 million VC fund with a bold mission to democratize access to venture capital because talent is everywhere, but opportunity, unfortunately, is not. Before that, David served as COO and CCO at WeFarm, where he helped scale the platform to 3.5 million users across 10 different countries, raised $40 million in capital, and led a 150-person team across multiple continents. Across 25 years, David has worked with and advised over 1,000 founders across Europe, Asia, and Africa, helping startups collectively raise more than $500 million. He's built fintech and telco products, led M&A deals globally for Telefónica, and proven time and again that great companies are born where capital, community, and conviction all meet and come together. David, welcome to Entrepreneurial Excellence.
Thank you very much for having me. And I must say, hearing you say that, it sounds a lot easier and super flowing than it actually was. But thank you.
Well, as an entrepreneur, we all know it's a roller coaster ride. It might look, those are just the highlights. I compressed your entire career into a 2-minute intro, and that's 25 years of work. So we skipped over all the bad things and the challenges.
One just a small thing is that the startup with 40 million in Africa was actually after the VC fund. So, but other than that, like on the dollar.
Excellent. So the question I like to ask every person I have on the podcast and show when I kick it off is define entrepreneurial excellence for me. How do you define that? What does that mean? You advise so many people, invested in so many people. What is an excellent entrepreneur?
It changes based on what you want to do. But if I'm looking from my perspective, the ones that were excellent, doesn't matter if the business succeeded or failed, are people that are able to learn fast, adapt, and focus on the problem, not the solution. Learning fast, adapting, and focusing on what is the problem you want to solve versus the solution you bring to market helps you on a continuous basis get to each level to the next level.
Okay, so I love that, but dig in a little bit deeper there. So when a few different questions at that point, you say like you focusing on the problem and not the solution.
Just putting some numbers out. It depends on which research you look at. 35 to 45% of startups fail because they are building things that people don't need. It doesn't mean they don't raise money. They actually end up raising money. But what they focus on is something that they perceive as a problem. But the way I define it is basically a headache problem versus a migraine problem, which is I have a small problem, but if I have a headache, I just take an aspirin for it. It's not materially meaningful for me to change my behavior to use it. And a migraine problem, if you ever had migraine, is like, slam the door, don't talk to me for the next 3 days till it's over. And theoretically, to build a successful business, to be excellent in what you do as an entrepreneur, is to discover that type of problem and dig deeper and be obsessed on how do I solve the problem. Because the product itself and the company itself may evolve and change all the time. Will because of the needs. Because serving 20 clients versus 2,000 versus 200,000 has completely different needs, and the business needs to evolve. Even if I'm going back to the startup that I mentioned before, we were focused on small-scale farmers in Africa. Okay, when we started in 2015, there was hardly any internet connectivity, but also no smartphones. Fast forward 5 years later, like we had about, at that time, I think 2.5, 3 million users on the platform, but it was mostly SMS. And we realized that the market has changed. And now 45% of the people within the region had smartphones. Shitty smartphone compared to what we call a smartphone, but it works, the data connectivity. Yeah. And we took a decision to flip and basically close all the SMS services and move to the smartphone. And one of the biggest uproar from even our own team was, you're leaving like the company aside. It's not what the vision was. Like, no. SMS was a platform we used to service the biggest problem, which is connectivity of farmers, helping them buy, sell online, and build entire business around the value to them. If they move the platform, we're going to move with them. And because the market is going to develop, 99% of them will have smartphones over the next 5 years, then keeping SMS alive doesn't make sense. And as a startup, you need to take tough decisions. But again, the obsession on the problem and the focus on where do you actually create the value allowed us to drop something that took us years to build on a system that we had to completely pivot. A better example and a more successful startup than us, I don't know how many people know this, but Facebook moved from PC to mobile. There were 2 years when Facebook didn't issue new features on Facebook. They just removed everything to mobile and became a mobile-first platform. That was a very tough decision to do, and basically what saved them and made them the big mammoth that they're in are today. A lot of other websites didn't manage to move to mobile, and that was like, again, an example. You need to service where the the user is at versus focus on the product that I have and how amazing it is.
So to restate that, I mean, it makes so much sense when you're saying it that way. It's interesting, like in Facebook's case, they were solving the problem of social networking, and they didn't care where people were actually, like, they didn't care about the solution. They were just like, we need to solve for this problem. And guess what? Our people are all moving mobile, so we need to go mobile too. Yeah. If it means we have to jettison some stuff or get rid of our old products or not build new products for a while till we get this right. Yep. We care about the underlying problem. So if that's correct, analyze that in regards to like a founder, right? Because once again, as you said, people, they believe no founders, you have to be crazy to be a founder and an entrepreneur in the first place. And then you have to be crazy enough to think you're solving something that's a real big problem, because you're going to be spending a lot of time on it and it's going to be really difficult. And then you convince people to raise money for it too. So from smart investors, what do most people get wrong? Right? You said 30 to 40% get it wrong because they don't have the right problem in mind. Where are they and their investors missing the gravity of the problem?
Basically, a lot of them fall in love with the product that they build and aren't able to do the tough decisions. Like, again, even if I put us aside, Facebook for 2 years, not to issue a new feature at a company that already had, I think, several hundreds of millions of users at the time, and rebuild the entire infrastructure to mobile and create a whole user experience, super difficult. Most people will it's a cash cow, let's not touch it. But and again, like, this is a company that's already been big. Like, if you look at most startups, the realization, what you do usually in the first, I would say, 3 to 5 years, even if you raise money, is you're testing all your assumptions. And it's very scary to reflect, take those assumptions and adapt to what the customer needs versus because I raised based on one thesis. Like, going through the proof point, and I look at startups as a science experiment. You have an assumption, you prove stuff with data or disprove. At that stage, disproving something is as important as proving it, because you have a minimum amount of capital to execute within that and get the best out of solving the problem. And people forget that it's an assumption and assume it's a fact. Mm-hmm. And then they focus on the product itself. I assume that people would like to date online if I share pictures. Well, it didn't work. And then I'll do that. Basically, the best example I can give you from a completely different, Instagram. I don't know if you remember the story, but it actually started as a social networking tool. Yeah. The entire aspect was, and if you Google online, probably you'll find it. Like, he talks about being really disheartened and like annoyed at the fact that nobody uses it. And he was walking with his then girlfriend, now wife, on the beach. And he's like, listen, everybody's just using this filter thing. And she was like, so why don't you do the filter thing? And that was like that understanding, which is not focusing, okay, I wanted to build a social network, but I realized what people actually want, the audience that I've been building for actually wants this. And doing that switch is something most people are not, and they would have continued with the social network versus realizing that they can build a whole new product.
So is the thesis then that most founders do identify the right problem, but they build the wrong solution to it? Like, or in the Instagram case, did they even identify the right problem?
No, but because there are different ways to identify that you don't know what you're doing. It's either you basically come with an assumption and the market or the users prove you wrong, or your assumption is too small to actually sustain a whole business. For example, you see this a lot with students that come into, in the UK, it's called Fresher Weeks or the first year in university. Like almost every student that starts at startup in the year one is, I want to meet people, I don't know people. And they assume it's a grand problem that everybody really like, they can sustain a business. What it actually means is the first 6 months of being in university sucks till you have friends, and then you don't need to find new friends. But the amount over the last 20 years, the amount of students that came out to me and pitched, like, let's meet friends, or in different histories, like 10, 20 years ago, 15 years ago, every time somebody believed that that's an acute problem. And they basically it's called the sample bias. You look at yourself and your friends are like, we have this problem. Let's build it after that. So those are two aspects of it.
I mean, but so just keep playing on that, right? I mean, you could argue at some point one of those people will be right? What you just described is essentially what Facebook was initially, was Mark Zuckerberg being like, I want a way to look at the pictures of all these people at Harvard.
And again, keep in mind that we're doing now interpreting the initial reaction, what people had in mind. But Facebook came basically on, let's see, it's a phone book, which is let's see who's in and how they look. And then they played around and rated people and stuff like that. It wasn't, I want to make new friends, which is, there's no matchmaking per se. Like most of the people say, I'm new to the university. I like first time away from home. I want to meet new people because I don't have friends. And again, a lot of time it's the matter of luck. Like we don't talk enough about luck being in the right, but market timing and the need that may be solved by other solutions. I think the reality is when Facebook came, there were other, like Facebook was the 10th social network at the time. Like it wasn't the first one, but the way the product was built addressed a really good enough problem for people to actually double down on. And then they made it a whole monster.
Fair enough. Okay. So given some of those theses, like why did you decide to solve the problem that you're solving at Alma Angels, right? Which is focusing on women founders. And obviously, it's not clear for people listening. David is not a woman. I know you have some women partners, of course, but like, why was this a problem that you decided needed to be solved, and why, in a way, with the solution that you came up with?
If you look, and this is like, I'll talk about my own personal journey into this because my co-founders have different approaches and, well, different stories, of course, but also like they come from different backgrounds. But I think for me, a lot of it was self-reflecting on my own personal journey within the world of diversity and inclusion. I grew up in Israel where I was basically part of a majority, and I never experienced anti-Semitism or being part of a minority till I left, and suddenly I got exposed to it in different ecosystems and different scenarios. And it made me reflect a lot about what it means being part of a minority. And when 2017, when the Me Too movement happened, I was a partner in the fund in ADD. And I remember I was like curious. I was like, what do you mean sexual harassment in our industry? Like in a very naive manner, I was like, this should not be. We're focused on meritocracy. It's about execution. And I was like, and I remember having a conversation with my wife, and she was like, David, men with money and power, it happens in every industry. Like, and I was like, yeah, but, and this goes back to the aspect of the privilege I had of not suffering from the problem, that I wasn't even aware that it is a problem. And it was like really eye-opening. I remember at the time I went to women in the tech and venture industry that I knew, and I was like, we need to do something. Like, what can we do to address this? And one of them took a sign and said, David, it's okay. We know who they are. We just can't do anything. I was like, what do you mean? Like, yeah, it's a network business. They have money. People want to be connected with them. They'll continue doing that. And it will be very difficult to fight against. And I was furious. And it was funny because I, as a middle-aged white there, was more furious than most of the women because they're just accustomed. They lived with it. So they know the reality of it. At that time, I decided, okay, I'll do what I can do. Like if I want to see the change, I'll just start being active and proactive in this space. And I decided that every woman that I know or that reaches out, that works in tech or in IP driven businesses, because that's, as a VC and investor, that's my forte. I'll put 1 hour a week to support them pro bono, get them feedback, but also connect them to investors. Because feedback is nice, but money is what matters. And over 2 years, I spent up, I think I worked with close to 100 women, more or less. And, you don't spend a lot of time, but you end up catching up in different events. And they're like, oh, I saw you close this round. How did it go? And I became friends with many of them. And over time, I started hearing what today I call the shit show of fundraising while being a woman, which is completely different to fundraising while being a man. There's two aspects of it. A, the misogynist assholes. Okay, so the number of time the woman is the CEO, she's in the room, and all the investors just talk to the guy. And sometimes the guy isn't even the CTO, it's just the PA. And it doesn't happen once or twice, it happen all the time. Like comments like, yeah, but when you're going to have kids, we're going to bring a proper CEO to replace you. Being said more than once or twice, like, and different women from different investors. But what really got to me was the casual sexual harassment and how it was embedded. Like almost every woman I'd worked with, like, and this was in hindsight after I talked to most of them, had at least one story where, and then he said, let's meet up in my hotel room and close the deal.
Which is crazy. Like if some VC said that to me, I'd be like, what are you talking about? Like you're a thing. But I guess I would also probably not take it. It would be, they might say, hey, come out to dinner or let's have a drink afterwards. And that would be fine.
How many times have you got an investor approaching you and said, let's meet out Friday, 8 p.m., just you and I, and close the deal?
Never. That would be very awkward and weird.
Exactly. How many times somebody said, oh, if you wear a short skirt, it'll probably close the deal faster?
Yeah, obviously, never.
But here's the thing, like, and this guy, the number of 1,000 founders that I work with is not like a made up number. Like I ran an accelerator, I invested across different multiple. So I actually had the experience. And funnily enough, before I don't know, most of them were men. And I don't know one guy that was ever sexually harassed. And if you actually look, and the funny thing is because whenever I talk about this, if there's a guy, he reacts the same way that you, like eyebrows go all the way up. Oh my God. Because like I look at the numbers and 90% of the women I work with were sexually harassed at least once during fundraising. Not from the same guy, not from the same investor, nothing. But there was always that one weird one, which is very taxing and harassing in a already, like, I don't know if you fund people that fundraise, but it's a soul-sucking experience to be fundraising.
Oh yeah, I mean, look, I'm on 4 companies. 3 of them were venture backed. I've invested in 200 plus companies, so I've done both sides of the table a lot of time.
So like the experience of like pitching your vision, and it's not about everybody saying yes, it's finding the right one, but it's very exhausting. And then to add that, and the fun thing that I found weird was most of the women weren't that bothered. Or of course they were, but they were like, David, it's just the price of doing business as a woman in this industry. I was like, I did not accept that. Like that should not be. But they were okay, like they dealt with it and just they ended up raising and building business. But part of that experience made me think, okay, what can we do different? And how can we do stuff different? If you look at it, wasn't all men. It wasn't even majority of men. But it was 10%, substantial crowd of people, like 1 out of 10, like with the sexiest comment, like, yeah, for sure. Like, and
that's all. So if you have to talk to 100 investors to get your round closed, which is probably the average or something, 10 of them are going to sexually harass you.
To some degree. And again, it was really funny because over the years when I talk about this, I also had women founders approach me and say, yeah, David, no, but I've been in this industry and I was never harassed. Or like, that's okay. That doesn't mean it doesn't happen. Like, because I'm old enough in this industry, I also had women come back to me after they told me that a year later and said, well, it just happened. So it's really interesting. Like not all women get harassed and not all men, and definitely not the majority of men are not harassers. But like I heard stories where I wrote a post about this on LinkedIn, and I got approached by a female founder from North America. I'm trying to like not state too much information, but she basically said my investor sexually harassed me and they kicked me off the company.
Wow.
Like, how can you help me? And like introduced her to a couple of lawyers, but basically it was already lost. Again, it's something we don't talk about, but at core, if you look at it, you can't make assholes less assholes. Okay. And I don't believe it's about education. So my focus and my thinking was, how do we focus on the other side, which is the reality of fundraising and investing that people don't talk about is that a lot of it is emotional and focused on, do I like you? If Adam and David connect, Adam will invest in David because he'll automatically think more positive on the business model. He gives him advice. Wait, but does this work? Like, have you thought about what happens when it scales? Your entire approach to it works better. And nature built this in a very simple manner. If we look alike, if we have similarities, we connect faster. Yeah. And all of that is not a challenge. It's known. The challenge comes from 90% of investors being men, white men majority. Yep. And there's no malice in this. Okay, this is the thing where people assume that men are bad because they invest in men. No, it's not. But we have a bias because I connect faster and better with men. As an Israeli Brit, if I meet other Israeli Brits, I'll probably connect with them faster because we have similar stories. We grew up in Israel, but we're living in the UK. We have that story of being a foreigner and immigrant and becoming a British citizen. No matter how many British I'll meet, it won't be as fast as that. Now, imagine if you have 5 founders, 3 of them women, 2 of them men, 1 Nigerian Brit, 1 American Brit, and you're a middle-aged white Brit. You'll probably connect faster with a 25-year-old white Brit because it's the same culture. And that realization is where you realize that the thing you need to shift is who writes the check.
But what do you mean shift who writes the check, right? So you can't change the fact that you're a middle-aged white Brit Jewish guy. You can't change that fact. You can't change that there's human nature involved, that you're going to connect with people who are similar to you faster. So what do you mean when you change the person who writes the check?
So there's 2 ways to deal with the bias of that, the unconscious bias that people keep talking about. Most of the people in the industry look at it and say, okay, I'm going to tell you, Adam, that you are a bad person because you invest with bias or unconscious bias, because you invest more in men. Fuck it. So what? It's my money. I can do whatever I want. More importantly, even if I care about it, the effort to change behavior is super difficult. Alma's approach, and this is how we build it, is super simple. Just shift the needle. Instead of having 10% of the investors women, move it to 50%. Train thousands and thousands of angel investors that will be predominantly women, more diverse, and they will have the same bias because women invest more in women because they connect faster with women. Ride the bias versus work against the bias, because you won't be able to educate out of nature. And again, there's no malice here. It's not that Alma is not just women investors. 25% of all of Alma's, and we have about 600 investors, are men that invest in women and men. Most of the women investors in Alma invest in men and diverse teams, but also in women. But the reality is there's lack of access to deal flow with women and to female investors. And the idea behind Alma was, let's build a community that shares deal flow, helps you become better as an angel, educates you, and builds a community to help you do due diligence together. And the mission we set, because we have to have an audacious mission to galvanize people, is to generate $1 trillion in women-led wealth by 2050.
Yeah, I saw that, which is impressive.
But we have an Excel, we have numbers, and it's all backed with actually a business model and an approach on how do we scale that to 20 countries and have 10,000 active angels investing to 1,000 female founders every year. Not day.
How do you make sure that keeps happening on a regular basis? And what I mean by that, to be clear, is there's an unfortunate network effect with fundraising as a founder, right? So it's not just can you get a few checks in the door from anyone. It's actually a matter of getting lots of checks in the door. And the companies in many cases that are the most successful are the ones that are really good at fundraising.
The higher gaps. Okay. The companies that are most successful are the ones that are actually building products that people like and are able to scale that. Fundraising success doesn't equate to business success. Very few times does it align. More importantly, as an investor, if you actually look, cash efficiency and cash returns actually negate. People that raised billions ended up returning to the investors a lot less than multiples.
That's certainly almost always true. But I mean, there is something, or maybe not, you have the data, But like, I kind of imagine that there's sometimes the case where like some people, if they're good at fundraising and they're able to tell that story and get themselves started, that becomes a self-fulfilling prophecy. And maybe because they're good at fundraising, they're also good at telling a story to recruit people to come work for them and to build a team. And there are a lot of, because there are more men in the tech industry and all these other things, there's these ingrained biases that are completely unfair that make it harder as a woman overall. And so it's one thing to say, okay, we're going to help you get your earliest checks in the door from other women, but then how do you make sure those early checks also have high quality returns so that those women can keep reinvesting in the ecosystem, essentially recycle money back into the ecosystem?
So I think, and again, we are one of the only communities that is not a syndicate that focuses on a community of angels working together. So the way we see it, and this is why it's very important for us, that you think about our model as train the trainer. Because we don't actually now work with female founders. We bring the deal flow, we support, the angels bring the deal flow, we manage the entire operations behind the scenes of seeing 1,000 deals today, with like 1,000 deals a year, and invested in about 50 to 60 startups a year. But we don't actually, as Alma Angel, the people that decide the investment is not us. So we don't do the due diligence. We support, we give insight, thoughts, but the majority is angel-led.
So when you say, just make sure I understand the system. So when you say it's angel-led, they find a deal, they do the diligence on it. They say, I'm going to invest in David's company and I'm putting in $10,000 or 10,000 pounds or whatever the right term, right monetary system is. And then they get other people on the platform to also join, and it's like an SPV, or is it sort of like Angel List a little bit?
No, definitely not Angel List. Think about it, like, because people don't run their own syndicates on it. Although we have syndicate members that are members on it, but there's two aspects. When you join Alma, you have to commit, you have to cash, and you're able and willing to invest in 3 startups with at least 1 female founder over the next 12 months.
Minimum sack size?
No, but we say under 10K is probably enough for you. If you invest 1-2, it's probably crowdfunding, not relevant here. Like, you need at least a meaningful amount that you can actually like move something within that. And 10K tends to be that. The average investor as an angel investor in Europe is actually a 10K. We do have members that are at 25, 50, and 100K tickets, and we've seen even 300. But we're looking at averages and big numbers and so on. But from that perspective, the process from our side is Jane sees a cool startup, but it's not for her. Share it with the community. We have 600 investors. Somebody may like it. If it fits the criteria, it's tech or science IP driven, and there's at least 1 female founder with a double-digit ownership, then like share with the community. People will look at it and will piggyback on that. There's out of 600 investors, family offices, and angels, people have their own opinion of what is of interest. So the first aspect is just give the people access. Second, if you're seeing something that's interest, but you don't know how to due diligence it, come to the community, share with us, and we'll help you organize a group due diligence. And we'll bring everybody that says, if this is a climate, B2B SaaS, everybody that says they're interested in climate or in B2B SaaS will get invited to it. They need to confirm, then create a private channel on Slack where we due diligence together. And different people with different expertise support, they all join a video recording of the meeting with the founders, but then the founder can follow up individually because they get all the emails. So again, think about as operating system behind the scene. If somebody decides to invest, they can do it through an SPV, direct on the cap table, or whatever works based on the deal specifically.
Okay. So it basically gives everyone a community. It essentially helps all these female founders. Is that all focused then on UK, Europe, Africa, or is it worldwide?
Worldwide. That being said, 70% of our angel base is UK. And I don't know if you're familiar with it, but like UK tax breaks for angel investing are phenomenal.
I'm not aware of that.
So like basically you can, if you invest up to 200K a year, you can get 50% of it in your deduction income tax. So that's one bracket. Wait, that's just the first bracket. Also, if you hold the money in that company for more than 3 years, there's no capital gain tax.
I mean, even more amazing.
But that's the seed scheme. There's also the enterprise scheme, which as an individual, you can invest up to 2 million a year and get 30% in income tax reduction, and the same 3 years like no capital gain tax.
I mean, is that because the government wants to incentivize startups in the UK, basically?
Yeah. It doesn't even have to be a tech startup.
Just any business, basically.
Yeah. Well, not any, there's different criteria, but yeah. So as an angel living and working in the UK, it would be stupid to take any investment outside of the UK unless you put the first 2.2 million into UK businesses. Unless you see an amazing opportunity somewhere else and you're willing to say, okay, fuck the tax. I just want to invest in this company.
So then to ask a controversial question a little bit, why do I live in San Francisco, why do I see so many founders moving from Europe and the UK to San Francisco in the large majority of investing? Obviously, the United States is a larger capital market in general, but even then, there seem to be so many more successful large startups that end up growing and building here. Maybe they start in the UK and they get their first funding in the UK, but why do so many end up moving over here if the capital markets, or the tax market at least, is so biased in a sense towards early stage investing?
There's a lot of layers here, but like capital at such an early stage isn't everything. Like even with the tax breaks, it's also about the investors and the investor mentality. And I think the US has many benefits from that perspective. Specifically, and this is something that like I've been talking a lot in Europe, like people don't understand that venture capital as an industry is about 8 years old, 80 in the US. It started in 1948. Venture capital as an industry, if I'm being super generous, in Europe, started 20 years ago.
Okay. So big difference.
Which means you also have think about 20 years, if you think in fund terms, it's not even 2 full cycles of funds. It's one fund, because DPI, it takes you about 15 years to actually, not 12, but 15. Basically, if I'm being very optimistic, it's 2 cycles of fund. And in 20 years ago, there were about 7 VC firms across all of Europe.
Yeah. So it's small.
So the number of people that have experienced a full cycle of a fund and a startup and raised and failed and came back to raise again is, I would say, in the hundreds, not in the thousands. So as an investor, 92% of investors in all of Europe, not just the UK, have never run a business. Because to raise a fund, and you probably know this, you need other people with money to believe in you, not to actually are experienced in building startups.
Building a fund is in some ways no different than building a business. I mean, I would argue it's easier in some ways to build a fund than run a business, but it's the same general thesis, and
Yep.
both are difficult. So it's still just a less mature ecosystem. And then do you find that a lot of the entrepreneurs you back at Alma, do they end up moving to the US at some point, or do they stay in the UK in many cases?
I would say the ones that scale really fast will need the capital, and there's limits to that of how much you can get in Europe, but also to people that believe in the potential. Like once you've seen Facebook and Uber and in so many others, you understand the power law is not just a play on Excel, but actually works.
Yeah.
I think there's one thing that is very sometimes lost in the whole transition, which is the size of the market in the US does matter. Like the fact that you have almost 400 million people speaking one language. Yes, federal versus national, state-wise is difficult, but you get to a lot of people without needing to change anything on your app in terms of language, user engagement and stuff like that, or UX, UI.
Yeah. So my company, Chore, right? I mean, I think one of just over here, right? So we're our teams across the world, actually. And we sell to any businesses across the United States. And there's a few nuances in every state, but nothing major. It's all the same language.
Yeah.
It's all the same currency. So it's relatively easy to sell our product to any business in the United States, which makes my life a lot easier than if I were trying to sell it into 40 different countries in Europe, however many there are.
Exactly. So there's 34. Again, depends on how you count Europe as a whole, but yeah, languages and mentality and culture and coins. There's a big move now to create EU Inc., which is one type of limited company. But opening a German company versus Spanish company versus a UK one is completely different in terms even of capital requirements. You can open a company in the UK for under 20 pounds, which is like $24. And in Spain and Germany, you actually need several thousands, if not more. And like there's a lot of injuries.
Yeah, no, that's crazy. And I guess in the US, it doesn't really matter. We're actually having this discussion for my own company where, hey, can we help companies that were, most of the companies we work with are Delaware C Corps, right? Delaware corporations, basically. But I was telling my team, I'm like, we don't care if they're a Florida corporation or a California corporation. It doesn't matter all that much from the type of work that we do. And the costs to set them up are not all that different. There's some different laws that you might want to worry about for your long-term business, but it doesn't matter all that much. So once again, I hear your point. And so
all that being said, Sequoia opened an office, Lightspeed opened an office, like all the big firms are opening offices in London and looking into Europe, especially in the last 3-4 years. One of the things that Europe does have is the talent, like especially in deep tech. And there's a lot of, if you look at the founders and operators in most of the unicorns in the Valley, they have a lot of immigrants from Europe that were the core behind that. So there's the really interesting thing is that if the talent is there, like the capital will follow. And one thing that when I talk a lot with people from the US, they always talk about, okay, why Europeans come to the US? I want to challenge Americans a bit because Americans are good, not on building international companies, but on scaling within the US. And the US is big enough market, but even if you look today at Google and Facebook, okay, like landmark companies, there's 50 people on the US team and one person for the rest of the world. ROW, most American companies, when they start a new business, it's basically one person in charge for 220 other countries. And it's about how Americans think on the potential of the rest of the world compared to the potential of America.
But isn't that also driven to one of your earlier points? It's driven a bit on dollars. I mean, there's a reason why there's such a bigger team focus in the US. It's because the money that they make in advertising in the US is so much larger. Even if the number of people on Facebook in the US and Europe are relatively equivalent, the amount of money Facebook makes, because the US is much a wealthier market with more spending power, is so much larger. So you're going to dedicate more of your resources to that.
But you're taking out those two as advertisers. Look at any other business. Very few businesses in the US are looking at the world as an opportunity. And in terms of, I'm not even talking about when you like grown businesses. They're like, and this is the attraction of the US market. It's big enough to create billion-dollar companies without needing to leave. I'm not saying it's bad. Okay. I'm saying it's really good. But when people think about building global companies, like most of them are not building global companies. They're building great American companies that serve American markets. And then about 10, 15 years later, they start expanding, which again, sometimes works, sometimes doesn't. But I think there's a lot more that Americans can think about. Like, and again, going back to like selling to other markets, India is phenomenal. Like the pace of growth and what you can do there, but it's a completely different market. But you look at businesses that scale there, there's $1.4 billion.
Yeah, I know. And it's also sort of a single market. I mean, the opportunity of India is certainly, I'm very bullish on India's growth and where it's going. So going back to like, speaking specifically to dive into like entrepreneur stuff again. We got a topic, so the Alma stuff in Europe was very interesting to me. But speaking deeply about entrepreneurs, right? You mentioned like the best ones are ones who learn fast and adapt and really are able to focus. How do you identify that when you're explaining to folks in Alma to make their investments? What do you tell them to look for? How do you identify that learning fast, adapting quickly, focusing type founder mentality? Because everyone will say that, right? If you talk to any founder, they're all, of course, not going to say, of course I learn fast, I adapt. How do you actually identify that?
Oh, show me what have you done? Where were you a month ago? What have you learned the last month? And how did you learn it? If the outcome is I read several essays and I met a lot of investors and there's no mention of one customer, like that's a red flag for me. Again, it's always a caveat. It depends on the business, because if you're selling to defense,
I've had these many meetings with the defensive, the 4-star general or whatever, and things like that.
And again, it's like within your own type of business, what's your ability to execute? Because again, sometimes it's a deep tech that requires 10 million in early stage funding before they can actually develop anything. I was like, so How have you learned? What have you improved other than pitching in the time that you've been doing this? And you very fast recognize people that have been pitching for 6 months but haven't been doing anything. And yes, I know fundraising is a all-consuming task, but the challenge is, are you able to do that and progress something? And if the answer is no, then like I prefer those who can.
Is there a way to train yourself as a founder to be good at that? Like, how do I get good at that sort of thing as a founder?
No, I think it's definitely doable, but I think it's just that easy. I think everything is doable. I'm a big optimist. Like, you can be an investor and not being an optimist, but I believe you don't have to be excellent at everything, but you can learn everything. I think a lot of it is basically self-reflective and putting things. So when I worked and advised with solo founders, one of the best ways is to create forcing functions to make you look in the mirror. So every Friday, 4 p.m., we have an entire team get together and we answer these 4 questions. How many customers have we met in the last week? Is there any insights? Where have we fucked up? And what can we do better? And if nobody can give me any answers on this, we're not doing it. And the fact that you're not doing it should be a wake-up call. But if you do this every week, you suddenly realize that you're not talking to the right people. Assuming what you're saying as I need to talk to customers. And just putting in, and not hiding behind like me, myself, and my co-founder sitting in the room, but all of the team together, it also says to the team, this is what's important for us. And like public shaming, including yourself, and not being vulnerable and exposing that also shows that you're working on the wrong stuff. So the goals of what you need to do that week are the wrong goals, or you're focused on the wrong things.
I'm smiling a little bit because this is a topic that I've talked about with my team. And also, I think I would actually push even further to say that the best founders nowadays are not just trying to talk to, a few customers every week or something. It's on a daily basis. Like, because of the ability with AI to vibe code, I can essentially create a new feature or a new example product. Like, basically the best companies today and the product managers in those companies are essentially creating that product in the morning. Like, your job is in the morning, you create a new product, build it, get something demoable. In the afternoon, you test in front of customers, and tomorrow you iterate and do something new. And if you're not moving at that pace, and by the way, this is something I've talked about with my team for our own product, we need to get to a pace where we're getting in front of customers every single day with new things. And if we are not doing that, we are moving way too slow. Some people don't have that in them though. And that pace is scary to some people.
But some business don't have that need as well. Because like, again, depends, like you're talking to somebody that already has, how big is your team?
We're about 45 people.
It's different if you have 5 people and you're still iterating at the beginning. But like a product that exists that you can launch features and vibe code is one thing versus an exploratory, do we actually solve the right problem type of solution? The network of customers you have access to is different. So your ability to because today you have customers. So for you to pick up the phone, like Adam's calling, give me 10 minutes every time I want to run something, that is easy. When you start building, it's like, okay, how do I get 50 customers? And I need to resell and sell the proposition. So that's all the main difference. And also, if you're selling to enterprise, it's a completely different, like getting in front of the right people. All of those are great indications of your ability to execute. So, and get the excellence aspect.
So if you think through the best founders you've invested in or have seen come through Alma, what are the qualities that they share? Is it this sort of ability to truly move fast, adapt, and like iterate? What are those qualities? Like, once again, if I'm looking to be an excellent entrepreneur, what are those qualities that I share or that I can learn?
That pace of learning and your ability to push on that is super critical. And part of it is being self-reflective and understanding what the learning means, but the ability to learn and find ways to learn when everybody says you can't or you shouldn't and there's no is super important. And it's not just on the product. Like most entrepreneurs that we meet and work with have never run a business before. It's their first startup. So learning how to become a CEO or from a founder within 2-3 years is also a challenge. Learning how to communicate. I'm sure like your team like 3 years ago wasn't 45 people. Like how you communicate with 10 people versus 45 people It's completely different as a CEO.
We were 7 people 3 years ago.
Yeah. So you all jump into a room. You said, hey, this is the vision. This is the mission. This is what we need to do. Now there's layers of management. And like when you get to the next level of 100, 150, it's like several layers. So even learning how to commit, and you've done like, this is a 4th business already?
My 4th business, yeah.
So exactly. So like what you've learned over time is a lot of things that you can replicate and you know how to do. Most founders don't get there or haven't gotten there. So their ability to do that while also doing the business is like a lot of things that come together.
That's true. Although I'd say the risk that I have actually, and the risk that sort of seasoned quote unquote entrepreneurs have, is you rest on your laurels and you don't keep learning every day and you don't keep reinventing yourself. So as an example, I had some interesting conversations yesterday that I now want to reinvent our entire hiring process, that what we do at Shore and how we do it, what we do, how we even compensate people. I want to change it all up. It might be totally crazy, but I think it might be a worthwhile test. And so I'm going to see if we can go make it happen. But so speaking of that, of testing, getting in front of people, I think you mentioned in some of your talks about like the value of getting intros right is kind of an art form. What's your philosophy around kind of getting warm introductions, relationship building, getting those either potential customers or investors that you need to enable your company to take off?
I just ran a panel with like 4 entrepreneurs on Monday, and every one of them raised more than $40 million throughout their career, building different companies and startups from different type of investors. And I think if you look at it, a lot of the learnings from that is basically that like finding the right investor depends on how you approach it from your own and being true to yourself and what you build. So there's no like specific answer on that one.
Well, it's data dump. That's sort of the question. I mean, I'll give you an example from what I've seen. I have people ask me all the time for introductions. They say, hey, can you introduce, I have 20,000+ LinkedIn connections. So they're like, hey, can you introduce me to these people? I'm like, no, like give me a good reason why. The people who do better at it, who I of course know, will say, hey, look, Adam, I've created a spreadsheet of all the people I want to meet. And I've figured out who you know at that firm and whether like they seem like a high quality connection. And then can you go through it and let me know how well you actually know them? And then it's just, yep, yes, no, yes, no, yes, no. And then they send me a forwardable that's targeted to that person. So all I have to do is copy and paste it. That's doing the real work, not being lazy.
Oh, no, definitely. I think that where I was trying to aspect more about the relationship building. So let's focus on the intros, because similar to yourself, I got a lot. And people that approach me that I don't know and ask for an intro, I usually send them to do some homework and say, okay, tell me why. 90% of them never do that. So that's already like a given. The people that do know me and are founders, I always try to support. And when they ask for intros, and I have it on my, actually, there's a great blog post by a founder from the Valley about how warm intros work and why. I basically say, listen, I'm basically taking the trust they have in me and saying you should use that trust and talk to this guy.
Read it off for folks who are listening. The Importance and Art of the Intro in Silicon Valley by Christian Thurston.
Yeah.
Awesome. Okay, great. Okay, so you tell people to do that. What's the high level for that, or what do you think is worthwhile then?
If somebody's willing to put the time and effort, I'm willing to do, I was like, go through my LinkedIn. Who do you want? Tell me the top 3 people and write me something I can forward. The really experienced entrepreneurs basically give me a list, say, these are the investors I don't have access to. Like, you have them all. Who do you actually think you can connect with? And you feel comfortable doing that. And then I get an intro specifically for everyone. I only need to forward. And I deliberately did that yesterday. Now, even then, I said, listen, but let's not exaggerate. Like, give me like 5, 6. I'm not going to do 50. Like, so that being said, is because I used to do 50. It's a bit, but there's a lot of like people that respect your time and are willing to understand that to do the warm intro means they need to do the work is the best type of intros that I'm happy to do. Because even if and most of the time the outcome is it's not a fit because like different reasons from their own investors, but it's like the person that gets the intro is impressed that I made the intro because of the work that they did. And that's the best thing you can do when you ask somebody to intro, which is position them in a better position than just sending, because introduction to investors happen all the time. I get like hundreds of them. But the ones that really tailored, even if the answer is no, impress you and say, okay, Adam introduced me to them. I'll remember Adam as a good introducer, even if the outcome was no, because most of the time I say no. It's a cycle that basically helps you get position the other person and help their brand of being a good network and connector.
So once you get those intros, and let's say your company's starting to take off, what do you think are the qualities or what qualities of the people who start to take off and get to their next, like from seed to Series A to Series B, and are able to make those jumps as the company's growing? Or what are some of those early stage mistakes that actually kill the momentum in a company ends up failing, even if they seem like a great founder when you first invest?
People that don't understand that they're building a company, not a product. Like,
actually, very similar to a conversation I was going to have yesterday on this. That someone said something pretty similar.
Yeah, because it's really like, again, going back to falling in love with your product. It's like, but it does this and does like. As an investor, what I care about is how fast your company will grow and how big it's going to get and what are the milestones towards that. Like, which again, the product is a way to do that, but I buy shares in the company, not in the product. And your understanding that that's the story you need to tell and not the story of the product is super important in your ability to do that transition.
So I'm going to push you in a direction for a second. So tell me if this is accurate. Do you think that what it actually means to be a great entrepreneur is not necessarily even an ability to identify the problem? I mean, that's important, but actually is the ability to build the business that can solve the problem. So in other words, it's okay, if you've identified the problem, sure, but then I need to build this business that can actually solve it, because that's what it really is about in the end, is building a business that can actually solve it at scale and grow and keep handling every new growth spurt that occurs.
I'll take that for sure. Because again, the problem is, and this is, it's a lot of small steps towards the right one, but the end goal from your perspective and my perspective is that the business will be sustainable and be able to solve the problem without, like, not just default alive, but actually making money out. Like, and that's a whole different perspective. Yes, it's about the business ability to solve the problem and the business growth to be able to address all the needs of the problem on different stages.
Yeah. Have you seen, like, what do you think about the ability of founders to handle when people say no, right? You say no all the time, I'm sure. How do you deal with that? And what are the best founders? How do they deal with when they hear no?
Excellent. Tell me why. Those that ask for feedback and ask you, like, the worst are the ones that assume that that's anything to do with them, which is like, I hate you, you're a bad entrepreneur, and just go off. And that happens. But again, it's also in terms of time expectations. How much time did I need or use of the founder? So if they just send me a deck and they want to meet and I say no, then I don't have time to give feedback. If I do, I put it in 1 or 2 liner type of things, because it's very open to interpretation. So it's very difficult. But the moment I meet the founder and they give me an hour of their time, the least I can do is actually write the feedback and give like a more detailed one. Because I always value, like, look at my time in terms of, as a founder, the most important thing that they have is their time. So if they give it to me, I need to give them something back in return for that.
The first of all, I agree with you. And so many investors don't do that. I try hard to give people very clear feedback right away, and tell them why I'm saying no, so they understand it, because it's just the right thing to do as a founder myself. What are certain, like, leadership skills? So by the way, I love your point about time and that being the most important thing. So dig into that a little bit more. How did the best founders, and how did yourself included? So how did you decide to spend this time versus other things? And how do you advise your founders where to spend their time? Because you can't get this time back, right? We're spending this together, and I appreciate every second of that. Where do you make that decision, right? Time is clicking and you cannot get more of it. Unlike money, which is something I try to tell people, I'm like, you can always get more money. You cannot get more time. So you need to be much more intentional about where to spend that time.
And so the way I said yes to you is I did some research and I really liked your approach. And I do believe that sharing more knowledge helps. So I pick and choose the ones that I do that with. And from everything I did, like, spent about 20 minutes researching you and what you like the podcast. I was like, yeah, happy to put the time in, like, and support. But I think it's about being intentional with that. And it took me a lot of time to learn to say no. Today I have templates of no, by the way. Like, and usually this is also how I differentiate founders that are worth putting the time versus those that don't, is I give them a small assignment. If they don't come back to me in 99%, like, I get so many LinkedIn's, like I'm sure you and every other person that has built startups or like has an investor somewhere in their CV. And I try to reply to every LinkedIn message. Sometimes it takes me 2-3 weeks. I say, how can I help? 99% of them have never replied. And I just delete. People that do reply are like, okay, I'll try. But sometimes they want feedback. And unfortunately, my time is super constrained. I was like, listen, I have a template that says, I don't have time to meet for a coffee for feedback. But if it's important, send me over the questions over email, send me the deck. It will take me 2-3 weeks, but I'll reply over an email. If it's important to you, if you actually want, and it's not a reason to meet coffee because we want to get your money because we want you to invest, which most of the time it is. And once in a while, out of I think 100 people, one of them actually sends questions, and then I answer.
Wait, and so I'm shocked by that. It's only 1% that actually replies back. So that's shocking in some ways. Once again, like these are people who are entrepreneurs or want to be entrepreneurs, and they don't want to send you questions. Why do you think that's such a small reply rate?
Because people have a misconception about what. So everybody heard about the whole ask for advice, not ask for money, and then you get, but nobody actually knows what it means. Like it means do the work to show that you need this person, you need David versus Adam. That you don't look at me like a money bag. They just send that email for a coffee, 15 minutes coffee. There's no fucking way in 15 minutes I can help you in anything. Like I'm not that good. Okay. So what you actually say, can I get an intro to you so you can give me money so I'll pitch your startup? Like, okay, you can't because I don't know what you do and why, and I need to prioritize my time. So tell me what you do, show me some love, and then I'll put my time. And even if the outcome will be I can't invest, but the moment you did that, again, because I think in time, you put your time, I'll give you my time back and connections if I feel I can help in any way. But most of the people are not really thinking that way.
Do you think people are scared of getting feedback too? Like, and I wonder, like, they just don't want to hear the no, essentially. So they are scared to ask, which means they're not going to be a good entrepreneur.
I think, yeah, majority of people are afraid. I think even I'm afraid to hear the feedback. Like I mentioned before we started recording that I was like in a session about something new I'm building. And the purpose of the session was, and I started with like, okay, grill the shit out of me. What am I missing? And he actually did a very good job. And I was like, shit. Like, but it was a very good point that I missed. And I was like, oh, I have to write it down. Getting feedback is bad. Like it's a shitty experience. Emotionally, because you believe you've done it all. But this is where the difference between a good entrepreneur and an excellent entrepreneur is just like, give me that pain, because pain is learning. Like I just came with my assumption. Like, as I said before, like your job is not to prove your assumption right, is to check your assumption. And learning that the assumption is wrong is as important as learning that it's right, because it gives you more information about the problem and the solution.
So this, by the way, goes to the point we were making earlier about getting in front of customers as fast as possible and having that Friday check-in at 4 p.m. to review. Did you hear no? Did you get in front of customers? Did you get feedback on that product? Because if you're not doing that, you're doing something wrong. And you need to get that feedback as fast as possible. And you need to hear that no to improve. So going back to the question, like once again, like where do founders break down? Are there other key things where they break down as they sort of start scaling their company?
Co-founders.
Co-founders.
It's like
co-founders or no like, do you prefer to invest in people who have a co-founder or no co-founder?
I don't actually care if the team has the skill set. I think there's value psychologically. Like I will not build a business alone. I want a co-founder. Like I've been through it. It's horrifying. Like even as a CEO, co-founder, it's tough because the CEO has different problems. But like you need somebody that when you're down will help pick you up, and your partner in life is nice, but it's not the same because they have a lot of rational reasons why to support you, but also they think you're crazy because they don't see it. So there's a lot of value, but you can find that support system in other CEO founders. Like there's different communities and stuff like that. But I think the reality is people jump into a co-founder relationship without doing the proper work. So Roxanne, my co-founder in Alma, I know her for more than 7 years before we started Alma. And most of the time Alma was a pro bono side gig for all of us. We all had full-time jobs. And about a year ago, Roxanne and I said, okay, if we really want to do this to get to the 1 trillion, we have to go full-time. It can't be a side hustle. And do we want to do this? And we're like, yes. Are we really compatible? Like, Roxanne and I had 13-year difference. She comes from public markets. She was the head of strategy and algo trade hedge fund, like completely different. She's grew up in southern France, math, all that. I'm economics, law, and like business, and completely different aspect, operations and venture capital. And we spent basically 6 months clashing proactively on how we build stuff and how we think about stuff. And okay, venture capital and community of venture capital is a 25-year journey. We build a strategy for the next 25 years. I met her partner, she met my family. Like, we went all in because like she needed to know why I'm doing this. I need to know what she cares about this. We went like really like 7 layers deep, and we're still working on it. Because this is something that you realize, because when in ADV, like my previous firm, I had 4 other partners, but basically we completely disintegrated within less than 4 years.
Really? Because just differences across all the different partners and disagreements?
There's basically, yes, but also a complete different, I think my wife said it best when we talked about it, which was you fell in love with the idea, so you're willing to forgo the red flags you had about the team. No, the red flags came to roost.
Why do you think you made that mistake as sort of a more experienced founder and investor at that point? What led to those mistakes? Was it just because of what your wife said? You fell in love with sort of the problem and just overlooked those flags?
I saw like, this is everything I wanted to build. And it was like with people that have access, and it was I felt like, this works. And there were a lot of red flags. And like, I heard them during, disregarded them, heard them after, where people were like, we knew it. We're like, how does the culture work? Because you're completely different. I was like, yeah, I know, but they said they're going to change. So again, there was a lot of things that I learned that then really impacted everything that we're building now, and Alma, and how we're building and what we're talking about it, and so on. But it was, again, like, you learn from all those mistakes over time. And on a systemic level, co-founders or any type of business, you think 10 years ahead, but within those 10 years, like, some get married, have kids, like kids grow up, and like, there's a lot of things happening in life. So you need to think about what actually matters and how, and like, are you willing to dedicate this to, like, I always equate this to basically having a kid.
Essentially getting married, and then with your partner, you're creating a baby, and that's your startup.
And the really weird thing is, it's easier to get an actual divorce than to get rid of your partner. Mm-hmm. Because only one person needs to agree to a divorce in real life.
Yeah.
Like, the moment we're talking about shareholders, good luck with that.
And is there anything you recommend founders do to date, in a sense, properly to find that good co-founder?
Yeah. Stress test it super fast. Start by like spending a week together working on the problem. If you're both full-time employed, 6 to 12. And once you've worked on it, define. So after your day job, whatever that is, assuming it's not a 9 and 6 startup, but basically whatever day job is, like, start spending time together, articulating the problem. How do you quantify it? And then start to think about solutions. Once you have something, leave the family for 3 days, long weekend, take a day off. So take Friday, Saturday, Sunday, and Monday off, and just spend it in the room together, stuck till you want to tear each other apart.
Yeah.
See if you are able to do that over the next 3 years, and think about it. If you're able and willing, and you know how to argue, and you know how to disagree and all of that, that's a good early indication that you can do that. Now, this is, if you stress test it, but the more time you know each other, the biggest mistakes I see founders do is they take friends, because they have the initial skill set for the first, I need somebody to code. This is my best friend for the last 20 years. He can code. Like, your work ethics are completely different. Like, you've never tested it. You don't know. There's a great questionnaire for, was it 32 or 36 questions you should ask your partner before you get married? Like, do that with your co-founder.
Yeah. By the way, my former co-founder, we did a variant of that. And it was very detailed. He shared all of his answers with me. I answered all of my own. We then sat down and talked through all of them. I will say my wife thought he was kind of crazy. When we met, we all sat down for dinner and had these conversations, and I was like, yeah, he is kind of crazy, but I like it. And his heart was in the right place, and he had all the right ideas. And to be clear, we're still partners. We have a VC fund together. We still do things together. We're not founding our company together. And I will say my current company, I'm the sole founder and CEO. My first three, I had co-founders. And I think early on, especially in my career, that was really important.
Yeah. No, but again, it also depends on your maturity and your ability to understand how to build a team, and do you have the network to build the skill set with you. 70% of the founders backed globally are sole founders. Like the whole fallacy of like, we prefer only to invest in teams. That's right, but it's not really like the numbers, because the value of a sole founder is like the value of dictatorship versus democracy. You can move really fast with a sole founder.
Correct. Yeah. No, and that's in the end, I actually try to watch out for that with my own team. Is I don't want to just force people to do things. I try to get some level of consensus, like obviously maybe push in certain directions, but some level of consensus. So walk me through I have a bunch of other quick questions. So we're getting too close to the end of things. If you can give yourself a bit of advice, so like, what was something you believed early in your investing career about entrepreneurship or about what to invest in that has changed significantly as you matured? Is there anything that you changed?
The more I saw it, especially in pre-seed and seed, the more I realized that backing the individual and their passion and their insights matters more than anything else, because everything's going to change. Like the business model, like at least twice, if not more. Like the market. Don't get me wrong, you do need to do that, because the way you due diligence by talking about all those things is getting the glimpse into how they think, which is what's important. Like understanding, have they thought it through? Like, do they know? Do they have a unique insight? And like, how do they go about doing that? All those are ways to evaluate the founder. And I'd rather pre-seed and seed, that's the number one thing that matters.
I agree. I mean, the most successful investments I made are all in founders who are, passion is almost the wrong term. In some cases, they're angry. They feel like they have something to prove.
The shoulder works every time.
Works every time, and it's just they are just driven in ways that others are not. What about leadership? So think through the best leaders that you know of in the world, either ones you've met, ones you've worked with, ones you invested in, ones you've read about. What are certain leadership characteristics that are critical in a successful entrepreneur?
That is the question that I stumbled upon, because I know what style of leadership I like, but I've seen other styles of leadership that work, although they're obnoxious, misogynist assholes. What I learned is founders build a culture and a leadership culture that fits who they are.
Absolutely.
So, and we have assholes out there, men and women. It's not like, but I think predominantly the culture that I found that one that actually thinks long-term is the one that doesn't screw people over. And leadership, and this is something that I found really interesting when I talk to Americans in general, which is like the American work culture that was basically brought all over the world talks about don't have emotions at work. But the reality is you can't avoid emotions. Mm-hmm. You don't need to show them, and it created a leadership style that says if you care for people, you're weak. You need to take hard decisions without emotions. And I think the thing that I don't agree with is that it's hard decision without emotions. Just have the emotions with them, but still make the hard decision. You can see the individual. And one of my toughest decisions ever was when we had to cut the team in the startup I work with by 50%. It was like we were close to 80 people, and we had like in 7 different countries and so that. But that was a process coming. But I couldn't talk about it with anyone. And the head of data hired his replacement, and I couldn't go out legally on top of everything and give the guy a hint. Now the guy left a very successful job to join us, and I knew he's on the block because he won't be able to join us. So the moment we announced the team, the first person I called was that guy and gave him the bad news. That was a week before he joined. He already finished his handover for the other company. And the first thing that he came out of his mouth was, but my work visa. And I was like, oh shit, I didn't even know, because I wasn't involved in the hiring process. I was like, we'll take care of it. Like, we'll make it work. Because we didn't hire him legally, we basically weren't obliged to do anything. Or we 1 week of pay or something like that. So I sat down with my VP of people, and she said, listen, we can basically pay him a month salary, but we can extend it over 3 months. So he'll still be employed, and we'll give him that, and that will help while he looks further. Now, the guy fucking hates me today. I assume, like he hated me that day. It was tough decisions, but I was true to who I am, and we gave him the 3 months, even though it was a horrible experience for him. He ended up finding a job and everything like that. The tough decision was taken. I didn't hire him just because. I gave him 3 more weeks of salary, just extended it over 3 months.
Yeah.
And this is what I'm saying.
Yeah, I know. Look, as a founder and leader, you have to make those tough decisions. And I've given up it always pains me because I definitely have people who are frustrated at decisions that they feel like I've made as a company, and we've had to let people go. And you hear these things, and we do an exit interview with everybody. So I read through all of them. And in many cases, I'm actually not even involved in the decision. Like my team tells me, hey, we're going to let this person go. I'm not even involved in the decision. Sometimes I actually say we maybe should try to keep them and keep them longer, but I want to trust my team. And then, of course, inevitably, because I'm the leader and CEO, those people get angry at me. They're like, well, Adam created this or made this decision. And I'm like, look, that's just the cost of being CEO. And unfortunately, I understand it. But it is painful. I also agree with, by the way, the thesis, and a lot of people forget this, of playing sort of long-term games. You didn't put it this way, but essentially playing long-term games and the value of relationships and being good with people and not being short-sighted. And we recently had a situation with one of our customers where we were trying to play a long-term game and do the right thing every way, and they sort of very quickly put it a different direction, and no one wins in that case. It's not a winning situation, and I try really hard to play long-term games. It doesn't always work out that way, but I try really hard to, because I'm in the same industry they're in, and we're in this for the long term, and my goal with what I do is to make them successful. It may not always seem that way to them, but that's always the goal. And same with my team.
No, so the way I position it is basically, most people play zero-sum game. I play infinite games. There's a good books on it called Infinite Games, which is basically you look in long term from that perspective. And yeah, it's like it's a type of leadership and management style that basically says we are all in this together. Like the tough decisions will be made, but it's about optimizing for the outcome that benefits, even if you need to take that. But I don't need to fuck you over, pardon my French, for me to succeed.
Yeah, correct. Everyone, rising tide lifts all boats. So a few last quick questions. One, we didn't really talk about your personal life or anything else, but how do you manage your own time? What does that mean? Like, how do you deal with like work-life balance or unity or whatever you want to call it in making sure you're hitting your personal work and life goals?
So definitely unity, not balance. I think balance doesn't mean it's 50-50. It's just you balance it to some degree. I work almost every day because I manage several things in parallel. But I try to keep the weekends to some degree, or even within the weekends work specific time that I can put the time with the family. But one thing that I started doing several years ago that was really helpful is it was part of my advice to my team against burnout, because people waited to take the vacations. And then in Europe, there's a lot more vacation days than the US, but basically still people wait to take it. And I was like, listen, I don't want you to die and then go on a holiday and then be sick, because it happens a lot. It used to happen to me. Like once a month, take a Friday off or take half a Friday off. But you don't have to do anything. Just like take it off. You're not with your family, with yourself. Just give it some time and space to do stuff. Now, for me, by the way, today was that day. I took not the Friday, I took the Wednesday, like 9 to 1 p.m. Just took the day off, went with my wife. We went to the woods, had breakfast together, talked about shit. Like we then split our ways and just enjoy that. But just the time together is not about operational at work or operations at house. So we didn't talk about how do we move the kid from here today. What about clubs? Just spend time together. Like revitalizes everything. And like you can do that with sports, you can do that with whatever. But again, especially in a 24/7 type of mentality, realizing that you're not stuck to the weekends to take off. Like especially in our type of world where we define our own rules of where do we work and what. Now that doesn't mean that every Wednesday I take off, but once a month I find half a day that is more convenient, that there's not that meeting, or I push the meetings for the afternoon and just do it.
I love that. And related to that, is there a single piece of advice that you would give to every entrepreneur to be excellent? So going back sort of to where we started, what's a single piece of advice? You could boil all this down, all those 15 years of work, all your 25 years or whatever it is plus of work, boil it all down into one thing of this is the single piece of advice people should keep in mind to be a successful entrepreneur. What would that be?
I think the problem is the moment I give one piece of advice and I have in my head, yes, but there's also that. So if you going back to what we said about building a company and not a product or solving a problem, but looking at a company to solve that, is that learn how to hire people better than you and delegate.
Yep. You're speaking something that is close to my heart.
And it like the first part is scary as fuck. And I actually wrote a short post about this a couple of years back. Because when you hire, like most people, like the whole A's hire B's, B's hire C's is true. But the problem is the people don't talk enough about why it's difficult for A's to hire A's. And it's difficult because it's scary as fuck. Because you hire somebody and you're like, oh shit, they do my job better than me. What about me? What does that say? And this is where, fear is a learning opportunity. What we talked about before is like, when you hire somebody that's really good at what you do now, like you let go, that means you're like, where am I? The beauty of a startup is that there's 500 other things that you can do differently as a founder, and you need to reach focus. But understanding that, and this is what I learned over the years when I hire somebody, is like when I'm a bit afraid that they're too good, I was like, yes, that. And then letting go the delegation is the second part of it. But if they're better, then it will be easier to do versus challenge everything.
Are there any key things that you recommend people do to get good at delegation? Like, how does one get good at it? Or what should they do to be okay with it?
It basically starts from don't do it in slow, rip the Band-Aid, just stop. But the trade-off in delegation is communication. The way I said, and it's building trust. And the way I had it when I managed people, that's like, listen, I got your back. You cannot fuck it up. There's no decision that you can do within your own field that is not reversible. And I got your back. I only need you to keep me informed that you're going to do this and why. So I can defend you or defend myself because it's on me. If it's something critical that you think is never reversible, please make sure we talk about this.
Yeah, this is very much stuff I tell my team. We say the same thing, like, because we essentially you delegate your entire back office operations to my company, Sure. And I tell our team the whole thing we need to do is just communicate nonstop to our customers is the key thing every day.
Yeah. But again, the problem is, and this goes back to also a lot of remote working or hybrid working, is that people are not accustomed to build trust that way. That you already have the trust, but you need to learn how to communicate about what's going on. And it was really interesting to see different companies do that in different cultures because there's cultures that are inherently against that. They are very hierarchical. They can't do that. Anyway, that's a whole different discussion.
I love the point. David, how can people find you or Alma, get in touch, have you help them with intros, ask those questions as long as they are not scared of hearing you say no or give them advice they don't want to hear? Where can they get in touch? How can they learn more?
Alma-Angels.com. Find me on LinkedIn. Just if you message me on LinkedIn, tell me you heard me here, heard me talk. And if you actually haven't ask that. And David at Alma-Angels.com if there's something really important that you need to talk to me.
David, thank you so much for all these lessons, discussions, going through all the different things, women founders, investing, entrepreneurship, time, delegation, you name it. Your time is precious, so thank you for spending with me. I appreciate that, and thank you for being on the show.
Thanks so much. Really enjoyed it.